And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast for Thursday, June the 16th. I'm John. Thanks for trusting me with your time as we seek accurate context, good risk management, and exhibit patience. Lots more economic numbers out this morning. This morning, 7:30, a whole deluge of them. Traders and investors digesting them as we speak. To go through them, 7:30, the housing starts number came out, as well as permits. Housing starts down 14.4%. Permits, they were expecting 1.78 million. They came out 1.69 million, both of them missing the mark. Jobless claims. Initial jobless claims was expected to be 215,000, higher than that at 229,000. Continuing jobless claims, they were looking for 1.3 million, or actually 1,302,000. Came out 1,312,000. So both of those higher than expected. Philly Fed. I find this one to be very interesting. They were looking for 5.5. It came out negative 3.3. And we are still awaiting the nat gas numbers here at 9:30 Central. It seems inflation fears have set back into the markets as investors digest this deluge of data. U.S. stocks are lower after a positive close yesterday. The Bank of England has followed suit last night by raising their interest rates by 0.25%. Crude prices have continued to tumble to the downside this morning so far on potential lack of demand should we fall into recession. And the European natural gas prices have surged after Russia has cut off supply to Germany and Italy. Not all of it, just a large part of it. So we've had our natural gas leaked back to the upside, but I still think we're looking at a possible bear flag in that. As far as the VIX, the dollar index, and the 10-year yield, the VIX is up about 6.5% the last I looked, 31.53. The dollar index off slightly, 104.97. And of course, the yield on the 10-year up just a little bit today at 3.4%. As always, make sure you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome. We do appreciate if you subscribe to our YouTube channel, and you can get notifications when we do go live. No recap today. We're going to be going back to the Thursday platform where Dan and Jack will be talking at 3 o'clock. So I'll be good to see them back again. We do have Make Hogue Money today, right after the market forecast here, about 8:20. Here is a link to get into it. And good morning, Charles March. First one in the room. You win the prize. Scott saw and he conquered. Almost wished he had placed a short in the ES before bedtime. A lot of wishes, a lot of risk in that, but you can always, limit that risk with the stop. Would have been a good idea. Shaw, good morning. Yes, let's do this. Tachyon, good morning. Brian Frederico, James, good morning. Chilling with Dylan. Should be another interesting trading day, and aren't they all? Taurus Trader, good morning. Chilling with Dylan. Talking to Scott Saw about it, wishing he had done the same thing. Theo, good morning. I Print Money. Love that name. Ron, good morning. Zachary, Isaac, Bill Phillips, Terry King. Isaac, I don't think I would want that job even if they paid me for it. That is a tough job. Marcelo, good morning. Grim Reaper, guys, never trade overnight for 30 minutes, 5 minutes, etc. Dimitar, good morning. George. Lacey, George says good morning. And I so far don't see any gremlins. I seem to have been able to exercise the one I had yesterday. Brody, good morning from the Olympic Peninsula. Glitter Sandwich, good morning. Grim Reaper, do you expect a massive sell-off today and tomorrow? Don't know. It is expiration. It's quadruple witching tomorrow. Anything can happen. We had a full moon night before last. So it seems like the stars are lined up for something to happen. We've got some support here in the S&Ps with the weekly kickoff low that seems to be at least holding for now. We're going to have to find some business down below that level if we're going to continue a move to the downside. And, as we kind of go through the day, go through the context here, we're going to take a look and see how probable that could be. JST Wave, good morning. There's a new name. Glad to see you. Thanks for chiming in. Jerry is awake, and I hope I am too. Put the coffee on. All set. Got my coffee. I'm good. Denny, good morning. Frederico, not sure why it's a couple days that the CME bulletin is not updating like before. It was pointed out to me yesterday before I went and looked at the finals from the equities yesterday that there was a huge difference between the preliminary and the final in the S&Ps yesterday. I was going to talk about that moving on. Sometimes that website gets a little bit wonky. Just keep trying to get to it, and it's you can see how difficult it is to calculate open interest accurately when the exchange had a huge miss yesterday as far as the open interest in the S&Ps. What they say was about $125,000 boost in open interest yesterday on the preliminary. By the time they figured it out on the final, it was minus 8,000. So a pretty big miss on that one. You have to remember when you're looking at those numbers early, you got to take them a little bit with a grain of salt. Usually they're not that far off. Jan, good morning. Zappa, yes, I do love me some Frank Zappa. Maybe moving to Montana soon. Dan Trader, good morning. John Doherty, good to see you, my man. Chilling with Dylan. ACH, anything can happen. Absolutely. Trading Research, Rob T. Alfred, Sarah Hall, good morning. Prayers and love to you as well. Money Kiddo, there's another new name. Good morning. It's good to see you. Thanks for chiming in. Dead Letter Opener, Grim Reaper Trader. I'm not awesome. I'm just a guy. And I'm really looking forward to a lot of success for all of you. That's why we do this. James, busy at work today, but popping in to say hi. Thanks for popping in, James. Always good to see you. Phil, good to see you. And going to be a dental floss tycoon. That's right. Yippee-ki-yo-ki-yay. Got some Zappa fans here. I love it. Love it. The man was a genius. Okay, we got everything. We got business taken care of. We got make hogue money after the forecast. We're going to jump quickly into the charts so we can move on to make hogue money. Tuesday session, we had 2 trades. We had a nice winner. We had a small loss. That's the way I like it to go. I liked bigger winners than the risk that I have to take. We were successful in that. We had a wonderful conversation in there on Tuesday, and I'm hoping we're going to have a couple of guest hosts. Maybe if Anne Marie shows up, we can get her to speak up and maybe come up with some trade ideas. Always love to hear what Anne Marie has to say, as well as all of you. It's a team effort in there. This is on you. This is not on me. One of the things I love it. You guys take the responsibility off of me, which is nice for a change. All right, let's take a look into the charts now. We're going to start with the daily in the S&Ps. Let me bring it up and move it over. All right. So yesterday, the information was, I guess, viewed as positive by at least shorter time frame traders, as the market did close decent yesterday. It says we added 16,000 in open interest, and again, this is going to be really blurry because we're coming into we're in rollover and we're coming into expiration tomorrow. So We put in a new recent low so far in the extended trading hour session. Just like the market doesn't like to leave recent or all-time highs in the overnight, we may be looking at another opportunity to see price below weekly kickoff low, which, by the way, is 37.05. The market has tested down to it once 2 days ago, tested down below it, and is finding rejection so far. But again, we don't have all the participants in that market here just yet. So, if we're looking for continuation down below that, I think it's going to take new business. That's what these weekly kickoff levels are meant to bring out in the marketplace, is to bring new business, new participants, new sellers, new buyers, whatever it is. We're looking for the longer time frame to respond at these levels. Have they yet? Well, maybe they did on Monday, Tuesday, and Wednesday. Every time we got down near that level, buyers came in. Are they going to support this level yet again? Again, open interest is tough. Even the exchange doesn't really get it right on that preliminary number, especially during rollover. What did it say? Oh, it said yesterday a positive 54,000 overall. The final came out negative 800. It is a complicated thing to try and determine how many outstanding contracts there are out there and the change day to day. So we do have weekly kickoff low in play today. We looked below it in the overnight. We're holding above it now. Taking a look here into the 30-minute chart. Here's our look. Settlement is all the way up here. We know we've got a whole bunch of overnight weaker hands, short time frame shorts in this market. We can open with a gap, which I will find useful information if it indeed does happen. My real interest is what's going to happen at this level, at this important inflection level here, this weekly kickoff low, which was largely based on a measured move. Our friend Matt Hoyt would probably look at his pitchforks and say, yeah, you know what, this is a kind of an interesting level down here. Maybe Matt will be joining us for Make Hogue Money. We can only hope. But we can open with a gap. We've got a whole lot of overnight shorts. If these overnight shorts can hold this market lower, bring it down below weekly kickoff low, then I'll be monitoring for continuation, for new participation, new business down below this level. If it doesn't happen, we can easily return right back up to settlement and just kind of range back in value. Is it a value area, special situation play? It is true if we open with a gap, close the gap, and then get back into value. I don't view it as a highly probable or profitable proposition at this point. We don't know what's going to happen. So I'm going to be looking at the overnight inventory as a potential to sell at a higher price if they do unravel all these shorts. If we open with a gap and can't close them, the next barrier is weekly kickoff low. And if we accept down below that, there is space. Okay, we're not going to get go too far back into that. Let's take a look at crude oil now. So crude oil, we had a pretty decent breakout. You'll notice I've moved to the August contract. August is bringing more volume now, so I've switched to August. Yesterday we were still in July. Today we are in August. There is approximately a $2 discount in August from the July contract. So I've adjusted my levels, and we are looking at an overnight test of the weekly kickoff low after breaking out to the downside. We're in rollovers, so it's very difficult to see if we really brought in new business in open interest on this breakout below this level. The open interest actually lost 20,000, but again, that's because it's rollover, so it's very blurry during rollover. We closed down below it. We tested back to weekly kickoff high in the overnight. It was rejected, and we're continuing to see this move to the downside. What else did we do yesterday? We put in a late spike. This late spike here, okay, when the market pushed and extended the range to the downside and closed down there. It didn't give the market much opportunity with which to accept lower pricing. So now we've opened below the low of the late spike, which indicates potential acceptance of lower pricing, which would mean we could see this market continue to the downside. It does not mean that we close our eyes and sell. Maybe the opening range will give us an opportunity to see if that is a possibility. Here's that first minute. If the first minute is left at the high of the session, then it might mean, okay, we need to start looking. We need to find that risk limiter in the opening range to look for the push to the downside. We're going to go back and look at that. Do we have overnight shorts here? I would say we do have some. The market opened here and is trading here. Most of the overnight was to the downside. We've seen some of our shorts, our short time frame shorts, capitulate and come back here now potentially towards settlement. Take a look at the opening range again. We took out the high of it. There's nothing that says that can't happen, and then we push to the downside. But that's going to push me to be a little bit more patient to see if I can get better trade location. Maybe a gap close will be resistant for us. And again, anything can happen. We can take this market all the way back to the base of the late spike, which is 113.85. 113.85 is the base of the late spike. It's where the range extension occurred late yesterday, and then we closed in that range extension. The beginning of the late spike is all the way up here. I'm not really interested in trying to get short at the base of the late spike and hold it to the other extreme of the late spike. This is going to be a kind of a tough trade here. We do have weekly kickoff low as resistance last night, late spike. The nuances are saying I'm going to be looking for opportunities to sell at some point today. Not sure when, not sure how, not sure which spot, but it does offer us opportunity to limit risk. Yesterday's low gives us a chance to limit risk. The base of the late spike gives us the chance to limit risk. Unfortunately, the opening range we've looked above a couple of times. We finding momentum there, or are we finding sellers up there? Is this a confident opening range to the upside? We've got a little bit of weakness here on a 1 minute bar with a double top here. Going to be always interesting, ladies and gentlemen. Always going to be interesting. Let's take a look at the Nasdaq now. Very similar situation without the benefit of the largely created measured move weekly kickoff low here. The S&P's is down here. Nasdaq is largely range bound. This would be our fourth day in this range, and we're going to be trying to trade range rules. What are those rules? We get to the lower extreme of balance, we look to buy against the buyers that the market has found down here in the past. We get to the upper extreme of the balance area, we look to short against the risk management of the sellers that have been present up there before. Anything in the middle is a random walk, makes things a little bit more difficult. When we look at the S&Ps, the S&Ps are in a similar situation on the daily chart. A little more lower lows and lower highs here. But the Nasdaq is really looking balanced. So if we're going to follow balanced rules, we buy against the lows, we sell against the highs, and we go with breakouts in either direction. Here's the 30-minute chart. Overnight shorts. Here's our overnight low is really the lower extreme of this area of balance. Our overnight high, really the upper extreme of this 4-day, 3-day, whatever you want to call it, area of balance. Let me keep my focus for opportunities on those extremes. Again, if we open with a gap, close the gap, get back into value area special situation can play out. especially with all these short time frame shorts in the market. Still a lot of information to digest from yesterday and today, and we've got quadruple witching tomorrow. A lot of folks are probably going to choose to remain relatively flat or hedged through expiration tomorrow. So try and manage your expectations as far as looking for huge opportunities in these equities. Okay, now we're seeing crude oil taking its first step down below the opening range. Unable to close the gap. The initial move from the opening range was an attempt to close the gap, which it failed to do. It failed to come back into the late spike. What doesn't happen here is equally as important as what does happen. If you can find a way to limit risk, then you're good to go. Oh, hang on. All right. Let's look at gold now. Where are our buyers? Disappointing open interest increase on this move back above the weekly kickoff level, important inflection level. It seems our weekly kickoff level has become magnetic, which is kind of cautionary. We don't want to really play this area as short below, long above, short below, long above. It can chew you up that way. You can see we've got a bottom of a bar, top of candle body low, candle body high, candle body both sides, shadow down to that level. It's still an important level, just going to make things a little more complicated instead of going right to it and moving right away from it, or moving right to it and then moving through it and moving away from it. We got 3 days, 4 days where the weekly kickoff low has been a play or a factor in the marketplace. So again, yesterday's up day was disappointing as far as open interest. They are estimating that it was a loss of 4,800 in open interest. No new buyers there. There was maybe some short covering. So weekly kickoff, magnetic caution. Let's see what we've got as far as the 30-minute is concerned. There it is, the weekly kickoff. We had some overnight shorts. Those overnight shorts have brought the opportunity to the upside to this market. How much? I mean, we're still in range. We're above value now. Last week's low is right here. Weekly kickoff. Again, a little bit choppy, at least holding price. If we start to see our equities head to the downside, then I'm going to be looking for buyers to come into this market, because this is a pretty important day for our equities. If they start to fall apart, what is going to be the store of value? Where are traders going to go to look for a safe haven? Historically, gold's been a really good one. I don't think Bitcoin's been much better than gold as far as safe haven, as far as down as it has been this week. The more information, the more complicated things get. Trade what you see. Look at your nuances. Take a look at the euro. Day 4, imbalance. Almost looks like the Nasdaq, really. Continuing testing of the weekly kickoff low. The active open interest, we lost 1,800, so it's kind of inert. Expiration was yesterday. We lost 118,000 total, but that's because those contracts are going to settle in cash in the August contract, or I'm sorry, in the September contract. We lost 1,800. So what are we doing? We're range bound. Take a look at the 30. It's kind of hard to believe we're talking range bound as much information as we've had come out. I think it just goes to prove how it takes some time for all this information to be digested by the trading public. Overnight inventory, was to the short side. It's now reconciled. Where did we open last night? We opened right here. We're right back there. inside value, inside range, inside the balance area we've been in. This overnight high looks kind of interesting. We haven't really spent much time up there other than the night before last. We hung around up here for a little while. So I'm really kind of focusing on balance rules here if I was going to be trading this market today. I'm probably not. I don't see that there's a compression. I don't see that there's that much that is enticing me to try and get involved in this. And that said, keep an eye on this market. It's probably going to make a liar out of me. 10-year. So yesterday's move was largely priced in. It was kind of a yawn yesterday. Overnight open interest yesterday, really kind of inert. We added 5,000 in open interest. We added 5,000 in open interest, and that's nothing to the 10-year. There was a muted response to the FOMC meeting yesterday. We're in an area of balance. 1, 2, 3. Even lows, even highs. We're right in the middle of it. I'm going to try and avoid doing anything until we get to these extremes because that allows me the biggest opportunity to limit risk. And what's job number one for us? It's to limit risk. Here's the 30-minute. Overnight shorts. Here's where we opened last night. Here's where we got down to. Shorts just bringing price back to settlement, back inside value. And again, right in the middle of the area of balance we're in. Our overnight low and overnight high would certainly be my main focus to be trading in the 10-year today. In the middle here, I don't want to do anything because I think it can just go anywhere to either extreme of the area of balance that we're currently in. And the nat gas. Ooh. So the problem in Texas, we had the big move. We're kind of watching this for a creation of a bear flag. I think we're getting a little bit rich here for the bear flag. We lost 7,200 yesterday in open interest, estimated. Probably not that far off. Probably some short covering from those that caught some of this move yesterday and didn't get any continuation. Are those shorts still getting out? Who knows? We now know that Europe is going to need increasing imports of liquid natural gas. We had a problem that meant the natural gas was going to be sticking around here for a while. Doesn't look like that natural gas depot is going to be fixed until later on in the year. Still doesn't change the fact that the world demand is increasing. Here's the 30-minute chart. Here's that bear flag that I've been looking at, and we've kind of taken a look at and tested up to what I would say would be the upper channel of a potential bear flag. This would be an interesting spot because, again, I can now limit risk, and we've got 1, 2, 3, 4 touches, or what does Matt call it, frequencies? We've got 4 touches to this level here, so this does allow us the opportunity to limit risk. What I would really be looking for is a move back to the low of this channel and a breakout down below it for a bigger move to the downside. So we certainly do have our task set in front of us of how do we digest all this information and make wise trading choices. Well, I think the best thing to do and the only thing to do is to trade what you see and only take those opportunities that offer a small amount of risk. If you see a level that you're looking at and you say, you know what, if this thing gets past here, then something has changed. Look for those opportunities close to those levels. Don't try not to FOMO into anything. You see a potential change level, then trade close to that level and just to be able to limit risk. It's all about setting up the hypotheses, trading to the hypothesis, and of course always limiting risk. Yes, fire at the free port. All right. Yeah. Dead letter open, taking today on in very little bites. It's not a bad idea. Guten Tag, Eric. Wie ist das Wetter heute? Das Wetter ist nicht kalt. Not sure how to say hot. All right. Anne-Marie, hi there. Sitting in my hands for a bit. So much information. Hard for me to parse what I need. And I know my limits. So smart, Anne-Marie. So smart. I'm hoping you're going to join us for Make Hold Money. We're going to get in there as soon as we can. We've got just a few minutes before 8:20. I try and get in there before 8:20. And, Wie ist das Wetter heute? And let's go make some money as dental floss tycoons. Take your deep breath. Heiß. There it is. Das Wetter ist heiß. All right. Awesome, Anne-Marie. Look forward to seeing you in just a couple of minutes. Take your deep breath. Stay humble, grateful, and creative. Know your limits. Very important. And we'll see you in Make Hope Money in just a couple of minutes. If I don't see you, trade well today. Manage risk. That's your job. Manage risk. The rest will take care of itself. And continue to be kind to yourself, kind to others. Continue to pray for peace. And I will see you in just a couple of minutes. If I don't see you, trade well today. Get out there and profit.